Let's be honest, the 2025 housing market feels completely broken. Buyers are running the numbers and they're finding it impossible. Sellers are looking at today's mortgage rates and they feel like they're trapped. It genuinely feels like everyone is losing. But the actual reason why the market is stuck has much less to do with scary headlines and more to do with numbers that reveal what is actually going on. So we're going to break down the data that explains this nationwide gridlock and what it means for your next move.
Okay, let's go.
There's a term that economists are using to describe what is actually going on, and I think it's brilliant. They're calling it the Anna Karenina market. The famous novel opens with the line, "All happy families are alike." Every unhappy family is unhappy in its own way. Right now in the housing market, every group, buyers, sellers, even the builders, they're all unhappy, but all for their own very different and very unique reasons. This isn't a crash, it's a stalemate. It's a market that's defined by stagnation. So let's look at the big numbers telling this story. For 22 straight months, the number of homes has gone up. Active listings have jumped by 21% compared to last year, which means buyers technically have more choices. But there's a paradox. Inventory is still almost 15% below pre-pandemic levels, and sales are down. Homes are just sitting there, spending a median of 60 days on market, a full week longer than last year and officially slower than before the pandemic. Meanwhile, the national median list price is stubbornly flat, hovering just under $430,000, a level it's been stuck at for a while now. So if there's more homes for sale and nobody's buying, why aren't prices crashing? And what does this paralysis mean for you in your next move? To get the full picture, we need to look at every unhappy party one by one. Let's start with buyers because their pain is easiest to see. It's a brutal and simple math problem. Affordability is hovering at the worst levels it's been at in years. Since July of 2019, the all-in monthly cost of owning a median-priced home, assuming a 20% down payment, has skyrocketed by over $1,200. About half of that is from higher prices, but the other half, the real knockout punch, has been the relentless rise in mortgage rates. As of mid-2025, the average mortgage rate is sitting roughly around 6.3%. And while that's a long way from the peaks that we've seen over the past couple of years, it's still a far cry from the sub-3 rates that we were seeing during the pandemic. To put that in perspective, a $400,000 loan at 3% has a principal and interest payment of about $1,686 a month. That same loan at 6.5% is $2,528. That's a difference of $840 every single month and over $10,000 every year. This is why the market's frozen. Even the cities that saw massive booms during the pandemic and the prices are starting to cool off, buyers just aren't feeling the relief. Take Austin, Texas, for example. Prices there have fallen about 15% from their peak. You'd think this would be a huge buying opportunity, but because rates have climbed so dramatically, the monthly payment on a median-priced home is still way higher than it was before the pandemic. So for buyers, a few more homes on the market really doesn't matter. The occasional price cut doesn't make a big enough dent. Buyers right now are waiting for either the huge drop in the price or the huge drop in mortgage rates, and neither of those things seem like they're going to be coming anytime soon. Now let's flip to the other side, the sellers. You'd think they'd be sitting pretty, right? Homeowners across the nation are sitting on roughly $18 trillion in collective equity. Many have seen their home values double or even triple. So why are they losing? They're victims of their own good fortune by what economists are calling the lock-in effect. The reality is, the vast majority of homeowners are locked into a mortgage rate below 4%, with millions below 3%. They look at today's rates over 6% and they do the math. Selling their current home, even to buy one at the exact same price, would mean trading their golden handcuffs, that ultra-low monthly payment, for a new mortgage that could easily be double what they currently pay. They'd be financially punished for moving. So they're refusing to budge, and now that's creating two different trends. First, Sellers are clinging to 2021 expectations. They remember their neighbor getting 15 offers over asking and think that's still the market. It isn't. As a result, over 20% of sellers right now on the market have had to cut their prices. The second trend is even more important for the market's gridlock: mass delistings. Instead of lowering their price to meet buyers where they are, a growing number of sellers are just pulling their homes off the market. In July, these delistings were up a shocking 57% compared to the year before. This isn't panic, it's frustration. Sellers are basically saying, if I can't get my price, I'm not going to sell at all. This pulls homes off the market and perversely keeps prices from falling, which adds to the stalemate that we're all feeling right now. Now that brings us to our third unhappy party, the builders. In a country with a long-term housing shortage of nearly 4 million homes, you'd think builders would be working overtime. Instead, they're pumping the brakes. Builder sentiment has been negative for the grand majority of 2025. They're fighting what they call a three-headed monster. Low buyer demand, with affordability in the gutter, not enough buyers are walking through their doors. High financing costs. Just like you, builders use loans to get projects off the ground, and higher rates make it way more expensive to build. Tariffs and material costs. Elevated costs for building materials are still adding thousands of dollars to the price of a new home. In response, they're building less. And to move the inventory that they currently have, now they're getting aggressive. Nearly 40% of builders have been cutting prices, and 2/3 are offering incentives like rate buydowns to attract more buyers. In fact, for the last several months, the median price of a new home has actually been cheaper than an existing one, something that is historically very unusual. But the bigger story is the slowdown. By building less, they are basically guaranteeing that the housing shortage is going to stick around for much, much longer. This means even if rates do come down, the simple lack of supply will keep pushing prices up, setting the stage for the next round of affordability problems. Now, it's important to understand that this gridlock is not the same everywhere. The national numbers hide a huge divide between different parts of the country. In the South and West, especially in pandemic boom towns like Austin, Phoenix, and Miami, inventory right now is above the pre-pandemic levels. These are the areas where you're seeing the price cuts, the homes sitting for longer, and the frustrated sellers pulling their homes off the market. But in the North and Midwest, in cities like Chicago and Boston and throughout the region, it's the complete opposite. Inventory there is still far below pre-pandemic levels. The market is much tighter, more competitive, and prices are holding strong or even rising simply because there aren't enough homes for sale. This is why you're hearing about the headline that prices are falling, but your friend in another state could be in a bidding war for a house that was listed 2 days ago. The national market is stuck in neutral, but your local market could be in drive or even in reverse. With all of the conflicting numbers and the stories from different regions, I want to hear from you. Let me know below where it is that you're watching from and tell me what you're seeing in your market. Is it a buyer's market? Is it a seller's market? Or does everything just feel stuck? The story on the ground is oftentimes more telling than what you're seeing in the national headlines. So let's bring it all together. What do you do in a market where everyone feels like they're losing? It just means that you have to be smarter and more strategic moving forward. For buyers, remember 2021, the frenzy, the desperation? That's gone. This is not a market where you have to waive inspections and offer $100,000 over asking. With more homes on the market and those houses sitting for longer, you've regained some of the leverage that you lost years ago. This market rewards patience. The key is to run the numbers relentlessly. Don't focus on the list price, focus on the monthly payment. If the numbers don't work, be willing to wait. The fear of missing out has been replaced by the fear of overpaying. For sellers, you have to shake off that 2021 mindset. Your home is only worth what a buyer in 2025 is willing and, more importantly, able to pay for it. Overpricing your home is the kiss of death in this market. You'll just get ignored and end up chasing the market down with price cut after price cut. Pricing it right from day one is your only path to a successful sale. And if you're thinking of pulling your listing, understand that there is no forecast of any magical return to the peak pricing that we had seen before. Pulling it off now and waiting a few months to list could possibly mean that you're just going up against higher inventory and more houses for buyers to choose from. So what breaks the gridlock? The 2025 housing market isn't crashing, it's resetting. And this stalemate is likely to drag on until one of two things happen. Either prices come down significantly or the mortgage rates do. Given how dug in sellers are and home builders slowing down, a price crash seems very unlikely in the current market. The most probable path forward is a slow, grinding journey toward balance that all comes down to mortgage rates. Most experts think rates will ease a bit but stay above 6% for the foreseeable future. This means affordability will continue to be a main roadblock. The market is stuck and it will likely stay that way until a meaningful drop in mortgage rates will bring buyers back to the market in full force. And when that does, all that pent-up demand, coupled with the chronic low inventory, we're going to be talking about a competitive market all over again. In the meantime, the real winners are going to be the people who act with clear eyes, solid data, and no illusions about the market that we're in. This is a game of patience and the game is far from over. If you got some value in this video about the current housing market, make sure to hit the like and subscribe button for all things real estate and Southwest Florida. If you think you're ready to make a move, there's a link in the description below where you can click and schedule a one-on-one strategy call with me, and we can discuss your next move here in Southwest Florida. Thank you for watching, and I'll catch you on the next video.